If you've ever been in crypto, you know the feeling. It is an absolute emotional roller coaster. One day you're a genius, the next you're wondering what on earth you're thinking. But what if there was a way to actually map those market moods? Well, that's what we're diving into.
And this quote just hits the nail on the head, doesn't it? Because behind every single price chart, behind every green or red candle, there's a very human element. It's a massive global battle between hope and fear playing out in real time.
So let's start with that core problem, the emotional roller coaster. You see, the biggest challenge for most people isn't picking the right coin. It's managing the two powerful emotions that can completely hijack even the most careful investment strategy.
And here they are, FOMO and FUD. These two are a brutal 1-2 punch. FOMO, the fear of missing out, yells at you to buy when prices are going vertical. Then FUD, fear, uncertainty, and doubt, screams at you to sell the second things get a little rocky. And the result? It's that classic, painful mistake you end up buying high and selling low. And if you've ever wondered why FUD is so powerful, this number explains everything. Psychologically, the pain of losing money is literally 2.5 times stronger than the joy of making it. Our brains are hardwired to avoid loss, which can trigger those irrational, panicky decisions that just destroy a good long-term plan.
So how do we possibly fight back against our own brain chemistry? Well, we use data. We get objective. And that brings us to a really simple but powerful tool designed to give us a clear read on the market's collective emotional state.
Let me introduce you to the Crypto Fear and Greed Index. Honestly, the best way to think of it is like a daily mood ring for the entire crypto market. It takes all the noise, all the hype, all the panic, and boils it down to one simple number from 0 to 100, helping you just step back and see the big picture.
And this isn't just some number pulled out of thin air. It's actually a composite score, calculated from a whole bunch of different data sources. It's looking at stuff like market volatility, trading volume, what people are saying on social media, even Google search trends, all to paint a really reliable picture of how the market is feeling.
So let's break down what the numbers actually mean. When that score drops down between 0 and 24, we are in a state of extreme fear. This is when the market is in full-on panic mode. The headlines are all doom and gloom, and it really feels like the world is ending.
Now moving up the scale a little bit into the fear zone, from 25 to 49. This means investors are definitely getting nervous. There's a lot of caution and uncertainty, but that widespread outright panic hasn't quite taken over just yet.
Then you have the other end of the spectrum. A score from 75 to 100 signals extreme greed. This is the party, right? Everyone feels like a genius, prices are going parabolic, and FOMO is absolutely everywhere. But it's also a massive warning sign that the market might be getting way too hot and could be due for a cool down.
Okay, so now we know what the index is, but how do we actually use it to make better decisions? Well, this is where it gets really interesting. We're going to use it as a contrarian's compass. The whole idea is to go against the herd.
And really, the entire strategy boils down to this one legendary piece of advice from Warren Buffett. The goal isn't to follow the crowd's emotion, it's to use that emotion as a signal to do the exact opposite. So here's the game plan, and it's super simple. Step 1. When the index is flashing extreme fear, it means the market is probably oversold and everyone is panicking. That could be a great time to start researching opportunities. And step 2. When extreme greed is off the charts, that's your cue to be cautious, maybe tighten up your risk management, or even think about taking some profits off the table.
And look, this isn't just some nice theory. It actually works. Just look back at March 2020. During that insane COVID crash, the index hit a rock bottom of 8. That was maximum fear, and it also marked an incredible buying opportunity. Then, fast forward to November 2021. Bitcoin was hitting its all-time high, and the index was at 84, screaming extreme greed, right before the market took a massive tumble.
Okay, now, as powerful as this all sounds, we need to be realistic. This is super important. The index is not a crystal ball, and understanding what it can't do is the key to using it the right way.
So you have to remember, this should never be the only tool in your toolbox. It simplifies things, it's focused on short-term feelings, it's heavily weighted towards Bitcoin, so it might not reflect the mood for altcoins perfectly, and crucially, it's a lagging indicator. It tells you what just happened, it doesn't guarantee the future.
So this is how it all fits together. Think of it like a three-legged stool. The Fear and Greed Index is your sentiment analysis. It tells you how the market feels. You combine that with technical analysis, what the price charts are actually showing you, and then you add fundamental analysis. What is the real long-term value of the project? You need all three for a sturdy, balanced strategy.
So, after all of that, what's the big takeaway here? What's the bottom line? It's really about putting the emotion in its place. It's about managing our own psychology by first understanding the markets.
The goal here is not to become a psychic and perfectly time every market top and bottom. It's about building discipline. It's about using the index as a reality check that stops you from chasing hype when everyone is greedy and gives you the courage to stay grounded when fear is trying to push you to panic sell.
So, at the end of the day, this tool holds up a mirror to the market's collective mindset. It shows you exactly what the herd is thinking. So the only real question left is, now that you have that information, are you ready to be the one who acts against it?